Very good evening, dear students. So, today we are going to take up a very important chapter, which is cash book. So, we have done a series, all the previous chapters thoroughly, be it understanding about the principles and concepts of accounting, be it passing journal entries, or be it posting them into ledger. Then, subsequent to that, it is the cash book. So, here we will see some important aspects. So today we are going to cover single column cash book. But before that, I would like to tell you that at AKS Commerce Academy, we have started both online and offline batches, wherein we are taking up subjects which are there in commerce as well as in humanities, so which are listed here. Alongside, I have started up taking up career counseling sessions, career guidance every Sunday at 11. So my appeal to all the students, you can join in along with your parents so that the discussion that I would be bringing for you would be significantly of helpful. The students who are now studying in 10th standard, 11th standard or 12th standard can join in. Now coming on to the cash book, let me take you to the page. Now here how and why there is need of a cash book. Now let's say one transaction that has happened. Started business with started business with capital rupees, say 10,000, or let's say 1 lakh. All right. So 1 lakh rupees he started. So there are two accounts which gets involved. One being the cash, which is coming in the business, and there is capital, right? Now, when we are passing journal entry for this particular transaction, there is an increase in cash. So we will debit cash and credit capital, right? So this is what we are going to do, credit capital and debit cash, right? Now, there are so many transactions after the business, after the cash is brought in the business, which is likely to happen. Maybe like salary paid in cash, purchases in cash, sales in cash, rent in cash, a number of them. Now, if an organization is small in nature, okay, small in nature, he can manage simply by putting up all the transactions in journal entry, through journal entry, and then subsequently he can put up to ledger. I believe you are understanding it, right? So if the organization or a firm is small in terms of its scale of operation, then journal and then ledger that can be passed. But when the organization goes bigger, larger organization, in that case, there are likelihood of so many transactions. So the count or the number of transactions are likely to increase as the scale of operation of the business increases. Therefore, if everything is put up in journal alone, perhaps the related information, any point of time, be it with regard to sales, be it with regard to sales return, be it with regard to purchases, be it with regard to purchases return, or bills receivable, bills payable. So there, some categorization was essentially required so that there are the countless number of journal entries can be avoided and only selected few can be entered in the books of account. Rest can be put up in the specific as per the specific nature of transaction. These can be put up in a separate book. All right, so we call that as subsidiary books. So I hope you have understood what is this subsidiary books. It is associated with the scale of the operation of a business. If the business operation is big enough, and there are likelihood of larger number of transactions in a day, and so goes month and year, so merely by entering in journal may not suffice the requirement, because there will be countless journals which would be required. Therefore, the scientific approach is list certain transactions in journal and other which are of similar nature transaction in various books called as subsidiary books. Okay, so that is how the term subsidiary book which has come up. So let us understand how it is going to be. So I hope you understood. So subsidiary books which are going to come up, I'll explain you what all subsidiary books are going to be there. But the premise for your understanding at this stage should be that everything need not be entered in journal if the scale of operation of the business is high or the scale is big. In that scenario, some more scientific approaches are required. So this is what we are going to study, which is alongside this journal, some subsidiary books. Now subsidiary books are specialized books wherein special nature of transaction of that particular book is entered in that, and any book where such transaction cannot be entered will be entered in journal. So it eases the process of entering, it eases the verification of account, it eases to get the immediate outcome of the process that has been followed, vis-a-vis one single journal which is put up for every nature of transaction. So this is required to be understood. So this happens to be the premise of our next course of discussion. Let us see. So cash book, I'll tell you what is the learning objective that we are going to have today on this. Now, let us see here what is there. So the learning objective, meaning of subsidiary books of account, I have given you a preface about it. The subsidiary books, classification of subsidiary books or subdivision of journal, which is nothing but certain items will only be put up in journal, rest all can be put up in their respective subsidiary book. We will also learn the advantages of following this practice, the type of cash book, which is single column, two column cash book, then balancing and posting of cash book, how it is done, then petty cash book, which is related to cash book, a little more extension for keeping the small, tiny expenses to be put up in petty cash. Now, these are the points which we are going to study today. So I'll take you to the meaning now. Now let's see here, it is very clearly written. It is a special form of journal. Now, when I talk about subsidiary books, it is not something different. It is journal only, but special form, a little different format is followed, which is subsidiary book. A subdivision of it, journal entry is not passed. Now, this is also important. There is no journal entry passed for the transactions recorded in such books. That means if there are, say, 100 transactions happening, which one is to be entered in journal, which ones are to be entered in various subsidiary books, that is to be decided. If it is to be entered in subsidiary books, any of them, as per the nature of the subsidiary book, it will not be entered in journal. So a journal entry is not passed for transactions which are recorded in subsidiary books. So credit sales, credit purchases, cash sales, cash purchases, these are the transactions. So if there is a credit purchase, it will go to purchase book. If it is a credit sales, it will go to credit sales book. it will not go to journal. So I hope you are understanding it. Purchase book, if it is a credit purchase, purchase book entry need not be put up in journal. If somebody wants to know what is the purchase status, he need not go through every single entry that has been done in journal, not required. He can directly get to the purchase book and verify the entries which he would like to, or check the entry which he would like to check. So that is a little more scientific approach to maintaining the books of account. I hope it is making sense to you all. Now they are directly posted into ledger. Now this is also to be understood. Once it is entered, be it in journal, be it in subsidiary books, wherever it is entered, ultimately it requires to be posted to principal book, which is called ledger. Now we have to keep in mind, and transaction which is entered in journal will not be entered in other subsidiary books, or transactions which are to be entered in subsidiary book will not be entered in ledger, in journal, but both these are posted to ledger. I hope you are getting it. But there is no separate account maintained, because subsidiary book is both primary book of original entry as well as it is a principal book which is called ledger. So the entries which are posted there in subsidiary books, there will not be separate account prepared for that particular subsidiary book. For example, let's say purchase book is maintained, and purchase and credit purchase nature transactions are entered in purchase book. Now there will not be purchase account separately maintained, because this book itself serves the dual purpose, being the prime original entry as well as the ledger. So we will not prepare a separate purchase account, but the entries which are made in purchase book, like purchases to Ram, purchases to Sham, whatever purchases book, then Sham account will be entered, Sham account ledger posting will be done, Ram account ledger posting will be done, but it will purchase account, there is no separate account called purchase account going to be maintained. I hope a brief understanding about it by now you must have. However, we will touch upon this in detail subsequently. Let us see now. We will go by classifications. So how we are going to touch upon the classification of it. Okay. So we will open this. Let's see what all there in classification. Now, one being subsidiary books are these, or subdivision of journal. Cash book is one of the subsidiary book. That means this records the transactions which are cash basis, not credit basis. If cash is involved in a transaction, it is going to get entered in cash book. Purchase book for credit purchases. Credit purchases. I hope you are understanding it. So any purchase which happens to be of credit nature or which is of credit, it is going to be entered in purchase book. There is no separate journal entry going to be passed. Third is sales book. For credit sales, we are going to prepare sales book, right? Then purchase return. So purchases which have been done and there is a return. So we will enter purchase return in purchase return book, sales return in sales return book, and journal proper, which is other transactions which cannot be entered in any of these, can be entered in journal proper. For example, discount. So discount, there is no subsidiary book for discount. So it will go, we will pass entry. If discount is received, then say Ram or supplier, Ram debit to cash usually we do, and to discount. So cash payment will reflect in cash book and discount will go to journal proper. So The entry which is going to be passed in journal proper is RAM debit to discount, and in cash book, the transaction related to this, which is related to cash, will be entered in the cash book. I hope it is understood. Similarly, if there is a purchase, so purchase is done and there is a discount allowed on payment. So when we are making payment to our supplier, receive when sales done and we are providing discount, so in that case, what is the entry that we pass for this? So sales, supposingly RAM debit to sales. This is the normal entry for sales. Now what happens when RAM is making us payment? The entry that we are going to pass is cash debit, discount debit, if we are allowing him discount, and then to RAM. This is the entry we are passing, right? So if supposingly 900 rupees we have received 100 rupees of discount that we have provided. So 1000 rupees is the credit given to RAM. So this cash to RAM is going to be entered in cash book. Discount to RAM will be entered in journal proper. I hope this is understood by all of you. Let's now move on to the next part. Now, what are the advantages of subsidiary books? We will touch here. Now, so these are the advantages. Division of work. So as I said that earlier, one person was maintaining the whole journal. So every transaction was maintained by one person. It was good enough when the scale of operation of a business was less limited. But when the scale went up and it became unlimited beyond boundaries, in that case, specialized nature or skill set was required. So there was one person to maintain journal, other one to maintain maybe purchase book, sales book, separate. So there will be specialized people to maintain each nature of transaction in their respective book. That is division of work. When there is division of work, there is likelihood of increase in efficiency in work. So this is the advantage which is associated with subsidiary book. Then comes the specialization and effectiveness. Now, how it is done? So when it is specialization, okay. So as one, if I am someone who is maintaining only purchase books, I'll get a specialized. There is someone who maintains sales book, he will get a specialized and he will be efficient. So whenever any data related to purchase or related to sales is required by the authority or management, it can very easily be sourced because the person who is maintaining it, there is less likelihood of error and more efficiency in terms of providing the related database to the required authorities or management. I hope this is making sense to you all. Saving of time. Anyway, since there are, as the number of manpower increases or a specialization increases, then there is corresponding benefit in terms of saving the time. Availability of information. I just a while ago I highlighted easy reference, easy information can be made available. Facility in checking. Since one nature of transaction is entered in a particular book, so checking becomes relatively easier vis-a-vis if everything would have been maintained in one single journal. Responsibility, if one person maintaining a purchase book is responsible for related its maintenance, its accuracy, its sharing of information, and everything related. So his responsibility would be to see every associated and related aspect. So I hope it is understood. Let us now go ahead and understand. So we have understood the advantages. Now we will touch upon cash book, which is one of the subsidiary books. Let's see now. It is a book in which receipts, a very simple, receipts and payments are in cash This is very important to understand. Only in cash is to be recorded in cash book through bank, which is one and the same, be it cash or bank is one and the same, are recorded in cash book. However, if it is a single column cash book, so only cash will be entered. If it is double column, bank will also be in the same book. So cash book is a book in which receipts and payments are entered. There is no other understanding required. So this is the cash book. We will see the next one. Some features of cash book. What are these features? Let's see. Only cash and bank transactions are recorded. So as I said, if it is single column, cash only, double column, cash book and bank, cash and bank transactions are recorded in cash book. Cash receipts and cash payments are check payments or check deposits are recorded in the debit side. Now we will see the sides: debit side or left hand side for all the receipts, credit side or payment side, which is for all the payments. Now we will see the next one. Now comes, it records only one aspect of a transaction, which is cash. So this is important. Only one aspect of transaction, not the credit transaction, gets entered in cash book. Cash and bank transactions are recorded in the cash book in a chronological order. This is important, which is sequential. It is not mix or haywire. One as per the date of occurrence of event or transaction, it gets recorded in the cash book. Not that later date entry is made prior or prior date is made later. This is not the right process. It has to be in sequence, in chronological order. It it performs as a function of both journal and ledger at the same time. We have seen, as I told you, that any subsidiary book, say for example cash book, there will not be a cash account prepared. Purchase book, since it is both journal as well as ledger, since the entries are made directly into cash book or directly into other subsidiary book, so there is no separate ledger account for these subsidiary books are required. However, keep in mind the transactions which are entered in subsidiary book, they will be posted to their respective ledger, but not the specific account, be it sales book or a sales account or purchase account or cash account is not required to be prepared. Now, cash book, it is both a subsidiary book and a principal book. We have already discussed that there will be a cash book if cash book is maintained. So, purchased, let's see one example in cash. So, what is the entry? Purchase debit to cash. This is the entry, right? Now, when we are purchasing, debiting, and cash is credited. So what happens in the cash book? This is receipt side, this is payment side. So what we are going to do, we will enter this purchase in cash book by purchase. We are not going to enter this in purchase book. Why? Because this is a cash purchase. So cash purchase, if it happens to be there, it will go to cash book. If there are credit purchases, it is going to go to purchase book. I hope it is making sense to you all. So direct entry is made. There is no journal required for this purchase debit to cash. No journal. It is directly entered in the cash book, which is by purchases. And there will be purchase account prepared for cash purchases, which will be credited here. So I hope purchase debit to cash. This is how we are going to enter it. So cash book, it's both subsidiary book as well as principal book, means it is both journal as well as ledger. Subsidiary book is nothing but a specialized form of journal. So It is both journal as well as ledger because we do not post into cash account for the entries which are made in cash book. I hope this is understood. Now, types of cash book. What are the types of cash books that are there? So we will see here. There are two types of cash book. One is this single column cash book, and there is double column cash book. So single column cash book, there will only be cash transactions, and here cash as well as bank transactions are going to be entered. So this is, I hope it is clear to you. Let's understand now single column cash book. So how it is to be done. This is the format. Okay. So this is the format of a single column cash book. Very simple. Date, particulars, voucher number, ledger folio. In practice, though these two we do not enter, but since there is a format we need to maintain. There is no entry as such maintained here. Then there is an amount column. So this is the left hand side, or what we call it as receipt side. So these are receipt side as mentioned here. And there is correspondingly on the credit side, if you look at, there is again date mentioned, particular or the payments are listed here. For what the payment was made, the account is maintained here, and the amount is written here. So this is how we prepare a simple cash book where cash related transactions are entered in the book. Now, balancing of single column cash book. Now, how the balances are to be maintained? It is just balanced as an account. Let me take some hypothetical figure here. I'll take this. Okay. So let us say this is our cash book. So there is this column, there is this column. So we'll maintain this. Okay. So this is our single column cash book. Now, how we are going to enter here? So balancing. So let's say it always just starts with opening balance. So cash cannot have a credit balance. So this is particular date. There is again a date here. Amount, particular amount. Okay. Now, how then entries are made here? So opening balance, let's say 1st January or 1st April. So we'll write it this way. 1st April 25. We are writing here to balance brought down. Let's say 10,000. Okay. During the year, some payments were made. Say one payment for showing you. So wages debit to cash. So here we are making payment of wages. Let's say on 15th April. So we are paying 2,000 rupees as wages. So this is it. Now we will close this account. So how is that? So we will have debit side. So we'll close this way. So amount total is 10,000. Okay. Then here this side, the amount total appearing as 10,000 we will write because the higher value is written on both the sides. These are receipts side and these are payment side. Receipts and payment. Okay. So 10,000. Now by wages, we have given here the wages. Now on 30th April, we are closing the book. So by balance carried down 8,000. And we will write here in the next month, which is 1st May 25, how we are going to write? To balance brought down 8,000 rupees. This is how the balancing of a cash book is done. I hope it is understood. Let's see now the next one. Single column cash book and some observations. So when cash book is maintained, okay, So when a cash book is maintained, cash account is not opened in the ledger. So this is what we have already seen. So there is no separate opening of ledger in the cash account. So cash book is balanced like other accounts. So just now we balanced our cash book. Very similar to the way we balance other account. It does not record a non-cash transaction. So because non-cash transaction, if it happens to be a credit, it gets entered in the subsidiary book. If there is a subsidiary book specific to that is maintained, for example, purchase sales, bills receivable, bills payable. So a non-cash transaction is not entered in cash book. Check received or given is not recorded here because it goes to double column cash book when we are making payment. So in single column, it is not recorded. But if it happens to be double column, we will record it. Cash discount allowed and received. We have also seen one example. So cash discount either allowed or received, it is not going to be entered. There will be a separate entry which is going to be entered in journal proper. Now, when an entry is recorded in simple cash book or corresponding entry is recorded in the ledger. So when an entry is made in the simple cash book, so all the items which are listed there in the simple cash book, these are to be posted in the ledger. So as we have seen, so it is required to be posted, but there will not be a separate cash account. Now, cash book will not have a credit balance in hand. A while ago, I told you because cash balance, cash can either be zero or be positive. There is no possibility of negative. So I hope this is understood, the whole discussion. Let us understand now a bit on questions. Now prepare a single column cash book for the month of April from the following transaction. Now cash in hand. So how we are going to enter this in our cash book? So I'll take you, okay. Now let us see. Cash in hand. So we'll prepare one cash book here. Single column it is, the same format which I told you a while ago. Now there will be just two column. Then we will see here last column is going to be amount column. Amount, date. Then again here amount, and there will be a date column. So date, particular, amount, date, particular, amount. Cash book, single column. So here how cash in hand. So how it is to be written? So what was the date? We will see here. 1st April. We'll write here 1st April to balance brought down. Cash book shows debit balance. How much of balance which is appearing here? 25,000. So we'll write here 25,000. Okay. Then the next entry, cash sales of 2,20,000. So what is the entry we pass for cash sales? Cash debit to sales. So we will write here to sales. How much of cash sales happened? So it is 2,20,000 on 2nd April. So 2,20,000 on 2nd April. I hope it is understood. Then next one, third entry, deposited cash in bank. So when we are depositing cash in bank, what is to be done? Bank debit to cash. So cash is credited by bank. Oh, sorry. So we will write here date by bank. How much of deposit? 2 lakh. And cash sales was this. So 2 lakh rupees were out of this was deposited. Okay. So this was done on what date? So 3rd April. Okay. So we'll write here 3rd April. Now, then the next one, issue check to creditor 49,900 after deducting cash discount 3,100. So all we are concerned about the cash payment. Issued check to creditor. Is there any cash payment? So there is no cash payment. So this will not be entered. Okay. No entry for this. No entry. Then wages paid 22,500. So what is the entry that we are going to pass? By wages 25,000. Okay. So this is the wages paid 25,000. Sorry, 22,500. So we will write here 22,500. Okay. 22,500. Then comes the next one. Cash sales 1,80,000. So we will write here cash sales 1,80,000. Entry which side? Receipt. Cash is coming in. So this is the receipt side. So we'll write here to sales. How much? 1,80,000. So we'll write here 1,80,000. Then deposited cash in bank. So bank debit to cash. Cash is by bank. How much? 1,50,000. 1,50,000. Then paid cash to transporter against bill on goods sold. So cash payment to transporter. So by transporter, which is 4,500. Then paid cash for repair 2,200. So by repair, and write the dates. 2,200. So we'll mention 2,200. Purchase goods on credit from you and company 15,000. So purchases. Purchase to purchase debit to cash by purchases, but it is credit purchase. Purchase goods on credit. So it is not going to be entered. So this is not entered. Paid cash to Sunil after deducting discount 500. So cash payment, what is the entry? Sunil 9,500. So by Sunil 9,500. What next then? Paid electricity bill 9,000. So by electricity bill 9,000. Then what next? Cash collected from Mahesh 45,000 and discount allowed 2,500. So 45,000 to Mahesh 45,000. Now anyhow you can write the dates. Just I'll show you how then balancing is done. So this side total, we'll total it up. So 25,000, 2,20,000, 2,45,000, and 1 lakh, 3 lakh 45, 4 lakh 25,000, and 30, 2 lakh 20, and 25, 2 lakh 45, and 180, and 45. This is how it is. So 4 lakh 70,000. 4 lakh 70,000. Okay. 4 lakh 70,000. And what is the sum total of this? 2 lakh 22,500. 2 lakh 22,500. 1 lakh 54,500. Then 2,200. 11,700 and 9,000. So 17, 1, 2, 7, 9, 1, 3. So 3, 1, 397. So what is the balance now? 470 minus 397, 300, 0, 17, so 70,300. Okay. So this is by balance carried down. This is our amount column. And we will bring it down here to the next month. To balance brought down 70,300. I hope this is understood. Okay. So this is how we prepare single column cash book. So what is the learning? There is no negative balance. Cash book always shows positive balance, which is debit balance. All the receipts are entered on the left hand side. All the payments are entered on the right hand side. And we finally balance it. So the balance again happens to be the balance for the opening balance for the next accounting session, be it month or be it year. So this is how we have understood all the points discussed today thoroughly with regard to single column cash book. So from exam perspective, I think the theory parts, which are obviously important, alongside the practical question, I would suggest you to work out the next subsequent questions. By and large, the two column cash book, which will have a little more depth questions, which will give you subsequent learning, though the the parameters of understanding remains the same, except that a few additional points we are going to cover up there in the two column cash book. So I thank you, students, for being in here. As I said, we have started up teaching students online and offline both ways. So the students who are interested, you can visit my channel, AKS Commerce Academy. All the videos which I have uploaded, you can have a reference to them. Very soon, 12th class also I'll be coming up with, so that students of 12th standard can take advantage or benefit of that. So it was wonderful talking to you all. My good wishes to you students, and thank you so very much.